It's 1920, and I'm standing on the bustling streets of Sheffield, a steel town still feeling the aftershocks of the Great War. The factories have quieted, soldiers have returned, and England's economy is trying to find its footing again. Across the country and beyond, the war has left a massive debt, with British banks holding the bag for billions owed by European nations. The Bank of England, only a few years into its new role as the country's lender of last resort, is experimenting with monetary tools that feel more like wizardry than science. The early 1920s hit hard. A brutal recession slams into the economy. Shipyards slow to a crawl, coal mines close temporarily, and unemployment lines stretch longer than the queues at the local fish and chip shop. But then, something changes. The Bank of England cuts interest rates, slashing the price of borrowing until it's almost free. Suddenly, credit is flowing. Ordinary folks like me start hearing about new possibilities. Buy now, pay later. A bicycle here, a wireless radio there. It's a new kind of freedom. But here's the catch. Cheap credit doesn't just fuel sensible purchases. It sparks something else, a fever for quick gains and easy money. People stop saving. They borrow instead. Businesses stop investing in factories. They start chasing share prices. The local pub chatter shifts from football scores to shares in British Electric. It's like everyone's caught a speculative bug. By 1925, the market is climbing steadily. Not wild, but enough to make a bloke like me curious. I'm not a city gent, but I've heard whispers of this thing called buying on margin. Imagine walking into a brokerage with a tenner, and the broker offers you 90 more to buy shares. Suddenly, your tenner controls 100. If the shares rise just a bit, you're laughing all the way to the bank. If they fall, well, that's a different story. Your tenor's gone, and you owe even more. The brokers in London are lending billions now. It's like a financial tower of Jenga blocks, each layer leaning on the one beneath it. Banks loan to brokers, who loan to speculators, who borrow from anyone with cash to spare. Some industrial firms even stash their own money into this frenzy, loaning it overnight at sky-high interest rates just to chase the thrill of a quick return. It's madness dressed up as brilliance. Across the city, investment trusts, mutual funds of the era, are popping up like mushrooms after rain. They're borrowing to buy stocks. Then their shares trade at prices far above the actual value of their holdings. Think of it as financial Russian dolls, where one trust owns shares in another, each layer more leverage than the last. The whole system hovers on the edge of a knife. Meanwhile, the newspapers sing praises of the market's endless climb. Radio shows discuss which shares to buy, and even the local schoolteacher is opening a brokerage account. At the office, the secretaries aren't just gossiping about the latest fashion. They're bragging about shares in Marconi rising faster than their wages. The city's young women dress sharply, with silk blouses and pencil skirts, stockings peaking just above polished leather shoes, their laughter carrying hints of confidence and danger, a subtle allure that fills the smoky clubs where deals are whispered. Yet, beneath the sparkle, the smart money is slipping away. Wealthy insiders quietly sell their holdings, while the rest of us are too dazzled by rising prices to notice. The Bank of England tries to cool things down, nudging interest rates up, but the money keeps flooding in from all corners. Foreign investors, corporations chasing yield, and everyday people chasing dreams. By late 1929, the market hits a dizzying peak. Shares in British Electric trade at prices that make no sense compared to the company's actual earnings. The disconnect between reality and speculation is glaring, but no one wants to be the first to say it out loud. This time is different, everyone claims. The new era has arrived, powered by technology and innovation, and the old rules no longer apply. But I know better. I see the tension in the trading floors, the frantic glances, the hurried phone calls. I watch as the machinery of leverage tightens, ready to snap, the moment before the crack, the one that turns paper fortunes into dust. And as I walk home that chilly autumn evening, the gas lamps flickering against the fog, I can't shake the feeling that the party is about to end. Something dark is gathering just beyond the horizon, and when it hits, it will change everything. But what exactly will trigger the collapse, and who will survive the storm? That I don't yet know. The morning sun barely cuts through the thick London fog as I make my way to the Royal Exchange, the heart of the city's financial world. The streets are alive with the usual mix of hurried footsteps and clipped British accents, but there's a nervous energy in the air that wasn't there before. Men in tailored suits clutch newspapers with bold headlines about soaring markets, while women in elegant cloche hats and silk gloves whisper about their latest stock picks over steaming cups of tea in corner cafes. Even the scent of freshly baked scones seems tinged with unease. Inside the exchange, the atmosphere is electric. The ticker tape machines clatter relentlessly, spitting out a stream of numbers that seem to dance higher with every passing minute. Brokers bark orders, their faces flushed with excitement. Or is it anxiety? I spot Mary, a striking woman I know from the club, leaning against the mahogany counter. She's dressed impeccably, in a sleek emerald green dress that hugs her curves, just enough to turn heads without scandalizing, her ruby necklace catching the gaslight's flicker. Her lips curl into a knowing smile, but there's something restless behind her eyes, like a cat poised to pounce or flee. Mary confides she's been buying shares on margin, riding the wave like everyone else. It's like catching a train that never slows down, she says, her voice low and seductive, and I'm not about to jump off just yet. She flashes a glance at her wrist, where a delicate gold watch ticks away the seconds. Time, it seems, is both her ally and enemy. But not everyone shares her optimism. Across the room I spot Harold Crane, a seasoned banker with silver hair and a jaw set like granite. Harold has always been a voice of caution, his tailored tweed jacket and polished brogues marking him as a man who values tradition over speculation. He's quietly selling off his holdings, muttering about the mathematics of madness and the recklessness of this crowd. Harold's warnings fall on deaf ears, drowned out by the raucous cheers of young traders celebrating their latest double-digit gains. As the day wears on, whispers of margin calls start to circulate. For those not in the know, a margin call is a broker's demand for more cash, when borrowed money buys shares that start to fall in value. It's the financial equivalent of a speeding car running out of brakes. Mary brushes it off with a laugh. It's just a little turbulence. The plane's still flying. But behind the scenes, the machinery is grinding down. Brokers scramble to collect cash they don't have. Banks grow wary of lending to each other, and the call money market, where brokers borrow overnight funds, sees interest rates spike to dizzying heights. Overnight loans cost up to 20% interest. Imagine paying that for a cup of tea. Yet the game continues because the potential payoff seems worth the risk. By late afternoon, the mood shifts. The ticker slows, then stutters. Faces that minutes ago were alight with triumph now tighten with worry. Mary's smile fades as her phone rings, her broker calling with a margin call. She excuses herself, fingers trembling as she steps into a shadowed corner. I catch a glimpse of her eyes, wide, vulnerable, and for a moment she's no longer the confident siren, but a woman caught in a storm she helped create. Outside, the fog thickens, swallowing the city's edges. The gas lamps flicker uncertainly, as if sensing the gathering darkness. And somewhere deep inside me, a cold certainty settles. The crack is here. The fragile web of credit and confidence is unraveling, and when it snaps, nobody will be able to catch the fall. But what will shatter first? The broker's fragile loans? The bank's shaky reserves? or the dreams of everyday people like Mary, betting their futures on a market that's forgotten what solid ground feels like? The answer is out there, hidden in the chaos, waiting to reveal itself, and when it does, it will change everything. The evening shadows stretch long over Manchester's cobblestone streets as I find myself at a smoky gentleman's club where the city's financial elite gather. The air is thick with cigar smoke and polished leather, mingling with the faint scent of expensive cologne and the clink of crystal glasses. The men here wear waistcoats and pocket watches, their collars starched and ties impeccably knotted, while the women, rare guests in these sanctuaries, glide gracefully in silk dresses that shimmer under the dim chandeliers. Tonight, one such woman, Eleanor, catches my eye. She's draped in a midnight blue gown that cascades over her slender frame, the fabric hugging her hips before falling in soft waves to the floor. Her ruby earrings catch the light with every tilt of her head, and her smile carries a hint of mischief, just enough to make you wonder what secrets she's hiding. Eleanor isn't just here for the company. She's a savvy investor who knows the market's rhythm better than most. She leans in close, her voice a sultry whisper. "You know, Edward, the game's changing faster than we like to admit. The great houses are shifting their positions quietly, and not everyone's cheering this ascent anymore." I nod, swirling the amber liquid in my glass. "Tell me more. I've heard whispers of margin calls and frantic sell-offs, but it all seems like background noise." She laughs softly, a sound that's both inviting and warning. "Background noise? Darling, it's the overture to a symphony of ruin. The brokers are calling in debts they don't expect to be repaid. Banks are tightening the screws, and the call money market is a powder keg set to explode. You see, when overnight loans balloon to 20%, it's not just greed, it's desperation disguised as opportunity. The room buzzes with conversations about rising dividends and technological marvels like wireless radios and motor cars. But beneath the surface, the tension is palpable. The old money, those who remember the crashes of the past, are hedging their bets, slipping out the back door with their pockets full, while the new money dances on the edge, drunk on the promise of endless prosperity. Eleanor's fingers trace the rim of her glass as she continues. Investment trusts, the so-called mutual funds of our time, are a tangled web of leverage. One trust owns shares in another, each borrowing to buy more shares, inflating values beyond reason. It's like building a house of cards in a hurricane. Her eyes meet mine, sharp and knowing. And when the first card falls, the whole thing comes down. The question isn't if, but when. As the night deepens, I watch as deals are whispered in dark corners, contracts slid across tables with the flick of a wrist. The air crackles with a dangerous excitement, half thrill, half dread. Eleanor rises, her gown swishing like a secret as she moves towards the exit. Before she disappears into the London fog, she turns back with a smile both inviting and cryptic. "Remember, Edward, in this dance the music always stops unexpectedly. Best to know your steps before you're left standing alone." I'm left alone in the smoky haze, the weight of her words settling like a stone in my gut. Outside, the city hums, oblivious to the brewing storm. But in the circles that matter, the cracks are widening, and the fall is inevitable. What will trigger the collapse? A single failed margin call? A bank's refusal to lend? Or a whispered panic that spreads like wildfire through the city's veins? The answers lie hidden in the shadows, waiting for the moment to strike. And when they do, the world as we know it will shatter. The next morning the sun rises over the sleepy town of Harrogate, its elegant Georgian terraces bathed in soft gold. It's a world away from London's frantic pace, where tea rooms hum with polite chatter and the scent of freshly baked scones drifts from every corner bakery. But even here, far from the city's chaos, the tremors of the market's turmoil ripple through the conversations of the townsfolk. I find myself in the quaint drawing room of a local estate, seated across from Charles Whitaker, a distinguished gentleman whose sharp blue eyes and silver-streaked hair betray decades of experience in finance. Today, he wears a tailored tweed suit that fits his lean frame perfectly, complemented by a crisp white shirt and a burgundy silk cravat, a nod to old-world elegance. His polished Oxford shoes tap thoughtfully against the patterned carpet as he speaks. "Edward," he begins, voice measured but grave, "you must understand, this frenzy we see is more than just speculation. It's a systemic sickness, the easy credit, the leverage. It's a poison that infects every layer of the market. The prices you see soaring are built on borrowed money, and when the music stops, it won't just be a stumble. It will be a collapse." I lean forward, intrigued. But surely the market can sustain some corrections. Isn't this just a healthy shakeout? Charles shakes his head, a faint smile tugging at the corner of his mouth. Healthy? No. This is a fever, not a cold. Take the investment trusts, for example. They're like a house of mirrors, each trust holding shares in another, all inflated by borrowed funds. When one falters, the reflections shatter, triggering a chain reaction. He pauses, eyes distant. And don't forget the insiders. The very men and women who run these companies are quietly selling their shares, unloading vast portions of their holdings while telling the public that business is booming. It's a betrayal, a silent alarm that few heed. As he speaks, I notice the delicate gold cufflinks on his sleeves, engraved with a family crest. A subtle symbol of the old guard, clinging to tradition amid the chaos. Across the room, a vase of fresh roses sheds a petal, a small reminder that beauty and fragility often go hand in hand. Charles continues, "The Federal Reserve is trying to tighten the reins, raising interest rates to cool speculation. But the system has grown too complex. Brokers borrow from banks, banks from other banks, and some funds from shadowy lenders beyond official reach. The central bank's tools are blunt instruments against a finely woven web of debt." I glance out the window, watching a group of children playing in the garden, their laughter ringing clear and innocent. It's hard to imagine the financial tempest brewing beneath the surface of this peaceful scene. But what about the average investor, I ask? Those like Mary or Eleanor, caught up in the excitement? Charles sighs deeply. They're the tragic figures in this tale, the ones who will lose the most when the market turns. They see only the glitter, not the cracks. Margin calls will come like thunderclaps, forcing them to sell at the worst possible moment. It's a mathematical inevitability. He stands, adjusting his cravat with practiced ease. Mark my words, Edward, the next 18 months will test the very foundations of our economy. And when the collapse comes, it will sweep away fortunes, destroy livelihoods, and reshape society in ways we cannot yet fathom. As I leave the estate, the autumn leaves rustle underfoot, their fiery hues a stark contrast to the cold certainty in Charles's words. The calm before the storm is fading, and soon the world we know will be unrecognizable. But what exactly will ignite the fuse? A sudden plunge in stock prices, a wave of margin calls, or something darker, lurking in the shadows, ready to break the fragile balance? The answer hangs in the crisp air, waiting to be uncovered. The city wakes slowly, but the pulse of change is already racing beneath its polished facades. I'm back in London now, wandering through the narrow streets of the financial district, where granite buildings tower like silent sentinels. The air is thick with anticipation, and every glance feels charged, like the moment before a thunderstorm breaks loose. Men in bowler hats hurry past, their polished shoes clicking sharply against the pavement, while women in tailored coats and cloche hats clutch their handbags tightly, their scarves fluttering like whispered warnings. At the heart of it all is the Bank of England, an imposing edifice with stone lions guarding its entrance, symbols of strength now tested by unseen forces. Inside, I catch sight of Sir Reginald Hargrove, a man whose reputation as a shrewd and cautious banker precedes him. His silver hair is impeccably combed back, and his tailored navy suit fits every contour with precision. A crisp white shirt and navy tie complete the ensemble, while a simple gold signet ring rests on his pinky finger, a subtle emblem of the old order. Sir Reginald's face is etched with lines of worry as he discusses recent developments with his colleagues. The call money market, where brokers borrow to lend to speculators, is spiraling out of control. Interest rates have surged overnight to alarming levels, 12%, 15%, even 20%, a rate that would make even the most hardened loan shark blush. Yet, despite the cost, the flow of money hasn't stopped. It simply changed hands faster, like a game of hot potato nobody dares drop. I overhear snippets of conversation. Margin calls are piling up, one banker mutters. If forced selling begins, there'll be no stopping the slide. Another adds, corporations are diverting cash reserves to short-term lending, gambling on yields rather than growth. The room vibrates with a tension that's both palpable and invisible, a financial pressure cooker ready to explode. Later, I find myself at a bustling brokerage firm on Threadneedle Street, where the atmosphere is a cocktail of excitement and dread. The floor is packed with traders shouting bids and offers, their faces flushed and eyes darting between ticker tapes and telephones. A young clerk, barely out of his 20s, runs a hand through his slicked-back hair as he recounts the day's frantic activity. Yesterday I saw a margin call that would have wiped out a man's entire fortune, he says, voice low. He begged for time, but the broker wouldn't budge. Next thing you know, the shares are sold off at whatever price they could get. It's like watching a slow-motion train wreck. Nearby, a woman named Beatrice catches my attention. She's dressed in a sharp, tailored charcoal gray skirt suit, her silk blouse slightly unbuttoned to reveal a delicate pearl necklace resting against her collarbone. Her dark hair is pinned back expertly, and her red lipstick contrasts starkly with her pale complexion. There's a steely resolve in her eyes, but also a flicker of fear that she tries to mask behind a calm exterior. Beatrice confides she's been managing a portfolio for a wealthy client, juggling investments amid the chaos. It's like walking a tightrope over a pit of vipers, she says with a wry smile. One false step, and you're done. Outside the firm, the London fog rolls in thicker, swallowing whole streets and muffling the city's usual clamor. It feels like the world itself is holding its breath, waiting for the inevitable. The cracks in the financial system are no longer hidden. They're spreading like spiderwebs across every corner of the market, but no one knows exactly where the first thread will snap. Will it be a sudden plunge in a major stock, a bank's refusal to extend credit, or a cascade of margin calls that triggers an unstoppable selling frenzy? The tension is suffocating, and beneath the surface, the machinery of collapse is already turning. As I step into the fog, the city's gas lamps flicker uncertainly, casting long shadows that dance like ghosts. The countdown has begun, and the question lingers. When will the first domino fall? The evening descends over Bristol, the river mist curling through the narrow lanes and casting an eerie glow beneath the gas lamps. I find myself in a dimly lit jazz club tucked away behind a row of faded shop fronts. Inside, the air is thick with smoke, and the sultry notes of a saxophone wail through the haze. The crowd is a mix of sharp-dressed gentlemen in waistcoats and bow ties, and women whose dresses cling just enough to suggest allure without crossing the line. Silk slips in deep burgundy, stockings held up by delicate garters, and lips painted a daring shade of crimson. At the bar, I meet Thomas, a seasoned financier with a weathered face and a salt and pepper beard. His tweed jacket looks out of place in this smoky den, but his eyes gleam with the kind of knowledge that comes from years spent watching markets rise and fall. He nurses a glass of whiskey, swirling the amber liquid thoughtfully before speaking. "Edward, you see, the trouble isn't just in the numbers," he says in a low rumble. "It's in the psychology. The market's become a beast, fed on greed and fear, and right now, fear is waiting in the wings, ready to pounce." I lean in as the music fades into a slow, haunting melody. "What's the tipping point, Thomas? What will set it off?" He taps ash from his cigar thoughtfully. "Margin calls. When prices dip just enough, the borrowed money dries up. Brokers start demanding more collateral, and those who can't pay are forced to sell. But selling depresses prices further, triggering more margin calls. It's a vicious spiral, a cascade that no one can stop." I glance around at the club's patrons. Among the laughter and clinking glasses, I spot a young woman named Lily, dressed in a shimmering emerald gown that hugs her figure, the slit revealing a flash of stocking-clad leg as she moves gracefully through the crowd. Her charm is magnetic, but there's a flicker of unease behind her sparkling eyes, a reflection of the market's fragility. Thomas continues, "And it's not just the speculators. Even the big industrial firms are caught up. Instead of investing in factories or workers, they're lending money in the call market, chasing quick returns. It's like a gambler betting his payroll on a single roll of the dice." The saxophone wails again, filling the room with a mournful sound. Outside, the fog thickens, swallowing the city's edges as if to hide the coming storm. "Soon," Thomas says, his voice barely above a whisper, "the music will stop. And when it does, there'll be no encore." As I step back into the misty night, the weight of his words settles heavy on my shoulders. The cracks in the market are no longer whispers, they're roaring threats. The question is no longer if the collapse will come, but when and who will be left standing when the dust finally settles. The morning light filters weakly through the grey skies of Liverpool, casting long shadows across the bustling docks. Ships creak and groan as they unload their cargo, but amidst the usual clamour there's an undercurrent of unease. Dock workers exchange hushed conversations, their rough hands stained with coal and salt, while merchants in worn suits peer anxiously at telegrams and newspapers. I find myself in the office of Harold Sinclair, a rugged man in his late 50s, whose salt and pepper hair is slicked back, and whose sharp eyes miss nothing. His worn leather vest and suspenders speak of a lifetime spent bridging the worlds of commerce and finance. On the desk before him lies a stack of telegrams, each marked with urgent red ink. "Edward," Harold begins, voice gravelly but firm, "the insiders are selling off their shares faster than anyone can keep up. Executives and directors unloading vast portions of their holdings while publicly preaching confidence. It's a betrayal that cuts deeper than any market loss." He taps a telegram with a trembling finger. "These aren't just rumors or isolated incidents. It's a systematic liquidation, a warning sign that most choose to ignore." Outside the window, a group of women in modest dresses and cloche hats gather near a market stall, their faces etched with worry as they discuss rising unemployment and dwindling paychecks. The economic storm is beginning to touch the lives of everyday people. Harold's gaze hardens. The smart money is positioning itself for the downturn. Hedge funds building massive short positions, foreign investors pulling back, central banks diverting funds to gold. Yet the public remains blinded by the new era narrative, technology, progress, endless growth. I ask, what about the regulators? The Bank of England, the government? He shakes his head slowly. They're trying. Interest rates have been raised and lending curtailed to speculative ventures. But the system has grown too complex, too shadowy. The call money market operates beyond their reach, fueled by corporations and wealthy individuals chasing yield at any cost. Harold stands, adjusting his waistcoat with a weary sigh. When the crash comes, it won't just be numbers on a page. It'll be families losing homes, workers losing jobs, communities shattered. As I leave the office, the cold wind bites at my coat, and the distant rumble of factory whistles feels more like a dirge than a call to work. The stage is set for disaster, and the actors are unaware of the tragedy about to unfold. But amidst the growing darkness, a question lingers. Who will have the courage and foresight to face the coming storm, and who will be swept away by the tide? The answer remains hidden in the gathering shadows. The crisp autumn air bites sharply as I make my way through the narrow streets of Oxford, where centuries-old stone buildings loom under a slate-gray sky. The town feels cloaked in quiet tension, the usual scholarly calm replaced by whispered debates in cozy pubs and lecture halls. Here, history seems to watch with a wary eye, as if aware that a monumental upheaval is unfolding beyond its ancient walls. I meet Professor James Whitfield, a distinguished economist whose silver hair frames a face weathered by time and thought. He's seated in his study, surrounded by towering bookshelves crammed with leather-bound volumes. His tweed jacket is slightly rumpled, and a pair of round spectacles perch on the bridge of his nose as he pores over market reports and economic data. "Edward," he says, adjusting his spectacles, "we are witnessing a phenomenon as old as markets themselves. The disconnect between asset prices and underlying economic reality is reaching absurd levels. Stock valuations are soaring, yet corporate earnings have peaked and are beginning to decline." He gestures toward a chart showing the rising Dow Jones, its jagged line climbing steeply even as profits plateau. This is the hallmark of a bubble detached from fundamentals. The new era thinking, technology, electrification, radio, has created a collective delusion that prices can only go up. Professor Whitfield's voice grows somber. What's more troubling is the relentless optimism that dismisses any warning as pessimism or ignorance. The media, investment advisors, even respected economists proclaim that this time is different. It's a dangerous cocktail of hope and denial. I notice a delicate silver pocket watch on his desk, its cover engraved with intricate patterns, a symbol of time's relentless march. "What about the risks posed by leverage?" I ask. He nods gravely. "Massive margin lending has magnified every movement. When prices falter, forced selling will trigger a cascade of margin calls. This isn't speculation, it's a mathematical certainty. The system is primed for a violent correction. Outside, the fading light casts long shadows across the cobblestones, and a chill wind rustles the fallen leaves. The professor's final words hang in the air like a warning bell. History shows us that markets do not correct gently, they crash. And when they do, the consequences ripple through society, reshaping politics, economics, and human lives. As I step back into the cooling evening, the weight of his insights settles deep within me. The pieces of the puzzle are falling into place, revealing a picture both fascinating and terrifying. Yet, a lingering question remains. Can we break the cycle, or are we doomed to repeat the mistakes of the past? And if the crash is inevitable, who will survive the storm, and at what cost? The answers lie just beyond the horizon, waiting to be uncovered. The night has fallen thick over Edinburgh, the city's ancient spires silhouetted against a sky heavy with clouds. Lanterns flicker along cobblestone streets where shadows gather like whispered secrets. I find myself in a dimly lit study, its walls lined with leather-bound books and faded portraits of stern-faced ancestors. Here, I meet Margaret Sinclair, a sharp-witted financial journalist known for her piercing insights and fearless reporting. Margaret's auburn hair is pinned back loosely, stray curls framing a face marked by determination and a hint of weariness. She wears a tailored burgundy blouse paired with a high-waisted skirt, her delicate gold necklace catching the lamplight as she speaks. Her hands, slender but steady, rest on a stack of newspapers and telegrams spread across the desk. "Edward," she begins, voice steady but urgent, "the signs are all around us. Trading volumes on the stock exchange have reached unprecedented levels. What seems like enthusiasm is, in truth, a frantic scramble. The smart money is quietly exiting, while the masses rush in, blinded by greed and hope." She taps a headline. "Stocks soar to new heights. Is the boom forever?" The media fuels the frenzy, painting a picture of endless prosperity. Skeptics are dismissed as relics of a bygone era. It's a dangerous narrative, one that blinds people to the storm gathering just beyond the horizon. Margaret's eyes darken with concern. Insider selling is rampant, yet companies publicly tout strength and growth. It's a dangerous game of deception, fraud by omission that keeps the dream alive until it shatters. I ask, what about the government and regulators? Are they doing enough? She shakes her head slowly. Efforts to raise interest rates and curb speculative lending are undermined by shadow markets beyond official control. The Federal Reserve's reach is limited, and corporations continue to pour funds into call money markets, chasing short-term yields at the expense of long-term stability. Margaret leans forward, voice dropping. When the market cracks, it will be a cascade. Margin calls triggering forced sales, prices plunging, confidence evaporating overnight. The fallout will be devastating, not just for investors but for society as a whole. Outside, the wind howls through narrow alleys, carrying with it a chill that seems to seep into the bones. She looks at me, eyes fierce. This isn't just a market crash. It's a reckoning, a moment when illusions shatter and the true cost of unchecked speculation is revealed. As I leave the study, the weight of her words follows me into the cold night. The final pieces are falling into place, the pattern unmistakable and unyielding. But one last mystery remains. Amid the chaos, who will rise from the ashes and who will be lost forever? And more haunting still, what hidden forces might be at work, shaping the fate of a world on the brink? The answer waits in the shadows of the coming storm. The dawn breaks over the sleepy town of Canterbury, its ancient cathedral casting long shadows across quiet streets, still slick with morning dew. But beneath this calm lies a tension that no amount of sunshine can dispel. I stand at the edge of the town square, watching as the first newspapers arrive, their headlines screaming warnings that many still refuse to heed. The financial world, once a glittering tapestry of endless growth and boundless opportunity, now trembles on the brink of collapse. The mathematics of leverage, those invisible chains binding fortunes to borrowed money, are tightening with ruthless precision. Margin calls, those unforgiving demands for cash, have begun sweeping through the markets like a relentless tide, forcing forced sales that send prices plummeting. I think of Mary, Eleanor, Beatrice, and Lily, faces of a generation caught in a whirlwind far beyond their control. The elegant dresses, the silk stockings, the delicate jewelry, they all mask a vulnerability beneath the glamour, a fragile hope soon to be shattered. In London, the ticker tapes struggle to keep pace with the chaos. Trading floors, once buzzing with confident shouts, now echo with desperate cries and stunned silence. The mighty investment trusts, those towers of borrowed wealth built on layers of leverage, are crumbling floor by floor, their nested structures collapsing like dominoes. Banks burdened by bad debts tighten their lending, choking off credit to businesses and families alike. Factories slow, workers are laid off, and a wave of defaults sweeps across the land. The social fabric strains under the weight of loss and fear. Yet amid this devastation, something stirs, a new awareness, a hard-earned wisdom forged in the crucible of crisis. Governments scramble to respond, crafting policies and protections that will reshape the economy and society for generations to come. The old certainties fracture, giving way to a world forever changed. But the story does not end here. The crash is but the opening act in a drama that will unfold over years, testing resilience and resolve in ways unimaginable. And lurking beneath the surface, shadows lengthen. Mysteries yet unresolved, secrets that could alter the course of history itself. As I close this chapter, the question remains. In the aftermath of ruin, who will rebuild? Who will rise from the ashes to shape the future? And what dark forces might still be at play, waiting for their moment to emerge? The answers lie beyond the horizon, in the uncharted territory of the years to come. And when the next storm arrives, the world will be watching, ready or not.